and we have to concentrate on the market because we are seeing serious losses, especially in the bank nifty. So we have invited Suresh Ganapathy, the managing director and banking expert at Macquarie. They're also going to be joined by Nilesh Shah, the head of Kotak AMC. Gentlemen, thank you very much indeed for your time. First to you, Nilesh. There seems to be a serious taking off of money from the market. It's not just infrastructure stocks and PSU stocks that are going, but even unrelated stocks are beginning to see taking away of money. What's the mood in the market?
Undoubtedly, market is, on the way up because of exit poll. And now the actual results are way below what exit polls were indicating. And that's why there is a correction in the market. Investors are looking forward to the actual results. Markets had factored in continuity of government and policy push towards accelerated growth. With this kind of result, people will wait on the margin to see what kind of formation happens.
Gentlemen, so yeah, I mean, we got to start to think about that kind of stuff, right? I mean, what kind of formations and whether, because as Lata was pointing out, I mean, it's not just the BJP, the NDA itself is now under the 289, 288 or so. Suresh Ganapathy is also with us. Prashant here, Nilesh Bhai and Suresh. Suresh, what does this mean? I mean, there is, there was people who were expecting a dividend because of political continuity, and that may still be there, but these numbers broadly, as an equity analyst and then as a bank analyst?
Yeah, look, I think, Prashant, it's back to basics, right? I think some of the multiples were just getting expanded and re-rated without any substance. So just to give you an example, SBI just cannot structurally cross an RoE of 1.1%. So on what basis the markets were giving high multiples to SBI beats me. The RBI's annual report talks about a whole lot of important regulations, be it ECL norms or be it project finance norms coming through. The market were giving complete scant regard to any of those regulatory, changes which are expected, which is definitely going to affect the PSU banks more than the privates. So my point here is, at the end of the day, what matters is earnings, what matters is RoA, and what matters is RoE. So it'll be back to basics, and that's where I think the reality will kick in, and some of these names will I've seen the selling and will continue to see the selling going forward.
All this in right now with about a 1,200 point fall. Now, we have to work with scenarios till we get to the absolutes, right? So if we work with a scenario where the NDA is still managing between 290 to about 300, then how do you expect the next couple of days to play out? Is this like, a knee-jerk COVID kind of OV? You do a knee-jerk reaction, then you kind of move on and then sort of get back to usual? Or is the market going to take time to really read between the lines in this verdict? What happens, tomorrow onwards? I'm working with scenario 1 right now, which is NDA roughly around 300.
So a lot will depend upon how things evolve. What markets would like is essentially corporate earnings growth, which in some sense is linked to GDP growth. Our markets are also trading at a premium valuation over other emerging market peers because of political stability. So there could be some amount of derating if there is no political stability. Policy decisions will make a material impact. Now, can one say that this result is indicating the subdued consumption? We have seen our GDP growth driven by public investment and trade far more than consumption and private investment. Now, if there are steps taken to boost consumption, then certainly consumer stocks will do well. If steps are taken to boost infrastructure investments, then infrastructure and capital goods will do well. So one is the valuation of India, which is kind of linked to political stability and continuity. And second is the policy steps taken by the government, which can influence certain part of the market.
Very well put, Nilesh. A lot of clarity in how we have to think. Overall valuations can also see a bit of cooling off because of the political stability premium going off a little, and specific sectors like defense or infrastructure or power likely to get a bit of a beating. And public sector banks, let's not forget. Suresh, you spoke to us about how the public sector banks, some of them were really trading at very high valuations given their historical RoA. But do you think that this makes the private sector banks get a look in? We didn't see too much of attention being paid to the Kotaks and the HDFCs and the ICICIs in the run-up to the election, especially the counting. Do you think they get a look in now?
Yeah, definitely. I think the narrative over the course of last couple of years were to move more towards the PSUs because they were better in terms of liquidity conditions and LDR ratios. And of course, the sentiment was very strong. I mean, now the focus will shift back to the private sector banks in our view because of the fact that, they are still reporting pretty stable, I would say, earnings growth and ROE. The ROEs of the private sector banks across the board is 16 to 18%. In fact, interestingly, Lata, if you look at it, the gap between the PSUs and the private sector bank valuations before today's, of course, changes was the lowest seen in the history. That's partly got to do with, of course, stocks like HDFC and Kotak not doing well and stocks like SBI having done pretty well. But now, if you were to really look at the outlook going forward, purely in terms of earnings growth, ROE trajectory, and more so even the balance sheet buffers and contingencies that the private sector banks carry. Remember that, as I said, some of these ECL regulations are expected to come as per RBI's own admission, and the PSU banks don't carry any buffer. So the focus will now again go back to what kind of ROA, ROE, credit costs you're going to report, rather than just re-rating on the back of a narrative or a story out there, right? So yeah, that's how we look at the focus back towards, let's put it this way, the defensives, which would be the private sector banks at this point in time.
Yeah,
Okay,
I
Suresh,
guess
thanks for that.
stocks for times when things are going haywire. Suresh, thank you very much for that point of view. Really appreciate you being with us on this busy, all-important morning. That I just, a lock, stock and barrel in these stocks.
Yeah.
So,
Nilesh, actually on that, Nilesh, you touched on a point that a BJP with 235, 240, at the moment I believe it's around 235, will have less negotiating power within the NDA itself. You touched on that point. Do you think that seriously takes down valuations for India because the existing stability also will be seen as less stable than what the 293 makes it out to be?
Undoubtedly, the first reaction of investor will be that if there is a coalition government versus one-party government, the policy making will get influenced by coalition politics. Then the focus will be on actual delivery. If they see that the policy reforms are continuing in right direction, then the re-rating can happen. But the initial reaction of investor will be that compared to one-party majority versus coalition politics, there will be push and pull, and economics will probably take a little bit of backseat vis-a-vis politics. There will be focus more on boosting consumption than, let's say, infrastructure investment.
But maybe that's not such a bad thing, Nilesh, at least for that part of the market. I know it's not the heaviest weight, consumer stocks, but if there are indeed steps taken to boost consumption at the bottom of the pyramid, would that necessarily, and maybe, not without letting the fist completely run away, would a boost in consumption necessarily be bad?
And let me tag in one more question, quite different. What kind of lows are you seeing for the market, Nilesh? Does it go below 22,000? Should we be prepared for a slightly bigger cut than we were?
So let me answer easier part. It's very difficult to estimate where is the top or the bottom in a day like today. A lot will depend upon how the actual results pan out. And boosting consumption at the bottom end obviously is not wrong. It's appropriate. However, how it is funded is also critical. If it is funded through, let's say, increased dividend from RBI, which has been already announced, then certainly it's a step in the right direction. So a lot will depend upon how policies evolve. I do believe that while there is a potential derating of Indian market because of political stability, the other fundamentals continue to remain in good stake. Our market cap to GDP ratio is well above averages, but profit to GDP ratio is also well above averages, and debt to GDP ratio or listed companies leverage is well below historical averages. Valuations are fairly priced, but it's not extremely expensive wearing low floating stock counters. So at some point of time, fundamentals will prevail and create a bottom. But where that bottom is, today it's difficult to predict.
There's a lot of numbers on debt and profit to GDP, profit to market cap and market cap to GDP. What about earnings per share itself? EPS for Nifty was 1,000 rupees for the current year, right? So what do we go with in terms of...
FY24 EPS...
Yeah, go ahead, please.
So FY24 EPS actually came 3% ahead of expectation at the beginning of the year. This is one of the very rare year where analysts had to upgrade the Nifty earning per share. And largely it was driven by financial services sector. There were obviously sectors like IT and chemical where profit growths were well below expectation. FY25 market is expecting about 1145, 1150 kind of Nifty 50 EPS. And again, it will be a broad-based earnings growth. So from a valuation point of view, we are reasonably comfortable. We do trade at a premium to others, but many of our peers are stuck in their own domestic problems. Russia is stuck in Ukraine, Brazil has a communist government, South Africa is going into coalition politics, China has real estate challenge and Taiwan. So in some sense, we are also getting a premium because others are not doing well.
Right, just a quick point on, I don't know if you guys talked about PSUs with,
Yeah, we did to some extent. But go ahead.
Any thoughts on, stocks are circuit down. Again, many of them had low floating sort of stock. Not many, but a few had. But broadly, what's your sense here? This was also, of course, the best way to express a view in terms of continued sort of reform momentum or whatever. But and now they're, of course, all going on the other side with some ferocity. Where do they settle?
So Prashant bhai, we were talking about how concentrated holding or low floating stock in PSUs and other counters is resulting into valuation way ahead of fundamentals. And, we did expect that if there was a capital raise in those counters, the discount could be as high as 25 to 30 to 50% also. Now, when you trade at that kind of valuation and there is a disappointment, undoubtedly corrections will happen and corrections will be swift and severe. Again, it's very, very difficult to predict where the bottom for the PSU stocks will be. But again, when correction happens in a market like today, the good, bad and ugly all gets hammered. This will be an opportunity to pick up those PSUs where floating stock is reasonably high, price discovery is more market driven than thanks to the low floating stock or concentrated holding. And you will see a bottoming out process happening in fairly valued PSUs fairly early compared to, let's say, low floating stock counters.
Okay, that Nilesh has been cautious for the last 6 months, at least.
Yes.
And he's been has been saying valuations are high, but I don't think. And correct me if I'm wrong, Nilesh bhai, you don't think you would not have imagined that the risk would come from this. I mean, the final, the correction would happen because of this.
That's what they say, right? The real risk is the one that you don't know.
It's
the unknown.
No, actually not just Kotak AMC in the form of Nilesh Shah, but Kotak Securities,
Absolutely.
quite
They've
a different wing, also were cautioning. And I remember some of the stock market anchors almost jeering, saying that why are they so cautious? Everybody else was much more gung-ho. And this is as recently as yesterday. I heard some stock anchors poking fun at the Kotak Securities. But now that caution is actually well received.
Absolutely. Sanjeev Prasad has been extremely cautious in a lot of the notes that Kotak Institutional
Especially
Equities puts out.
mid-caps.
Absolutely. So, yeah, I remember the Mad Caps report. But anyway, different arm, completely different from the AMC. But Nilesh, to come back to the point that you just made on, a lot of other emerging markets having their own problems. So I'm going to put a question to you, which actually should be put to, your peers on the foreign buy desks. But I'm sure you talk to them anyway. So let me get your sense on this. This FPI buying has been missing for a long time in this market this year. You folks have been sort of picking it up. Now, if we get this sort of a result, what do you think? I mean, if you could, step into the shoes of a foreign fund manager for just a second, is this a 1,000-point dip which is presenting a great opportunity to finally enter India at better levels? Or is this a moment in time where things become a little more unclear?
So we did see some amount of foreign short covering yesterday on exit poll. Today, obviously, things have changed. And if we see their behavior, it was kind of 1 month of buying, 2 months of selling, 2 months of buying, 1 month of selling. Yes, in the financial year, April and May, they have been net sellers. But otherwise, whenever they got an opportunity, they have participated in block selling by some of the multinational companies, some of the IPOs. My feeling is that global investor, just like domestic investor, will keep on evaluating opportunities. And as long as our fundamental story remains intact, there will be a buyer on correction. Does not necessarily mean today, but certainly they'll be looking to add to India over a longer period of time.
Fair point. Just a number, Nilesh. At the moment, if I go with what, 11,145 you said? 1100, 1145 is the Nifty EPS for FY25. In that case, we are still like almost 20 times. Do you think that, what is the long-term average? Does it go to 18 times, 19 times?
So one, Lata, we are already in the month of June. So in some sense, we are looking at a earning 10-month forward and not 12-month forward. Now on a day like today, it's difficult to, make those kind of adjustments. But my feeling is that over next 6 months, we will be transiting to FY26 earning, which will be more towards 1250, 1300 times. And that we will be somewhere around 18 and a half times. That's somewhere around historical averages. So we will see some amount of consolidation, which we had been saying some times ago. And as Prashant mentioned, for 5 months and 29 days, we were wrong on low floating stock PSUs. But finally, your conviction pays off.
Well, Nilesh, we will come back to you when we do have a decisive verdict one way or the other, when we have clarity, because we're still going with what the leads are indicating. But many thanks, as always, for joining us today on a very important day for politics in this country and, of course, for the markets as well. And we will come back to you in a short while from now. But here's the latest.